Welcome back. Well, for the markets, it's stable at this point. So let's get talking about a couple of companies then. Let's talk about Suryoday Small Finance Bank. It was a strong operational performance for the bank with strong loan growth and improvement in margins as well. Baskar Babu Ramachandran, who is the MD and CEO at the company, at the bank, now joins in to discuss the Q4 performance. Hi, sir. Thanks very much for joining in. Well, this quarter, what really stood out was your deposit and asset under management momentum. Your deposits, for example, were up around 50% on a year-on-year basis, 19-20% on a Q-on-Q basis, and AUM also 34% growth year-on-year. What led to this momentum and is it sustainable? What's your guidance?
Yeah, thank you. So we had a good year last year, including a last good Q4. The reason for some of the growth is that we had invested in 17 new branches during the year, which played out in terms of adding to the disbursement and hence to the AUM. So the overall sustainable growth in our view is anywhere between around 30 to 35, given that our base is not very large, and we intend that that will be our guided growth for the next couple of years.
So just to repeat that, you're guiding for 30 to 35% growth?
Yeah, in terms of asset growth and around closer to around 40% in terms of deposit growth. Currently, our CD ratio is around 111, so it will moderate to less than 100 at the growth of 30 and 40% respectively.
Got it. 30% AUM growth with 40% deposit growth. And this AUM growth that is coming by, could you break that down further up for us? And how much will come from MFIs? How much of it will come from commercial vehicles? How much of that comes in from SBL? Because we've seen some of them actually outperform your overall portfolio. Commercial vehicle, for instance, has on a low base once again grown 100% year on year.
Yeah. So as you rightly said, it's on a low base. And the fact that it invested in all of that a couple of years back, it's a 3-year build-up which has happened in commercial vehicle. So that's the reason that we are seeing a growth. And currently our AUM still is just 10% of our overall AUM, which is at around 800 crores. The intent is to really move the mix from unsecured, secured 60-40 at this point of time, which is tilted towards unsecured to move towards closer to 50-50. So we'll be somewhere in the range of around 45%, 55-45 during this financial year. And next year intend to go towards a 50-50 and then move it to around 50% asset in terms of secured and 45 in terms of unsecured. We'll continue to be a very strong player. Yeah.
Just a follow up on that, because you are moving away from unsecured, going into secure, that would start having an impact on the yields as well, right? Because secured assets would yield lower. So what happens to your overall NIMs then?
NIMs will moderate around 10%. Currently, we are guiding for around 10 to 10.5. You're right that as we move towards more of a secure, there will be a NIM contraction, but so will be in terms of our cost of operations. So in terms of cost of operations for unsecured, it is higher. We are not moving away or reducing our focus in terms of inclusive finance. That will continue to grow at around 30%, but there will be a little higher growth. And also the fact that the other secured assets are long tenor assets, they stay in the book longer, and hence the mix will change favorably towards secure. Not because of a slowdown in our inclusive finance business, but a higher growth coming from the secured business.
Okay, correct. So net interest margin should hover around 10.5%. That's what you guided for?
10 to 10.5%.
10 to 10.5%. Okay. Well, this quarter asset quality wasn't an issue for you all. Your slippages were just about 63 crores. It's been within that range in the past couple of quarters. But give us a sense in terms of what you are seeing when it comes to asset quality, when it comes to your rural portfolio. Any chinks in the armor?
We are predominantly a semi-urban, urban player, even in inclusive finance, not so much rural. Around 30% of our inclusive finance is rural, but 70% is more in terms of urban and semi-urban. Currently, we are not seeing any different stress than in a normalized basis, which is around closer to, as I said, around 2.5%, 3% in terms of slippages. But however, we are cautious and hence, for the one-off events ever were to happen, we have covered our results, our entire eligible unsecured portfolio, which is income generating through a credit guarantee scheme called CGFMU. And we are covering the entire portfolio, which is eligible, not cherry picking, and intend to do that in the coming years.
What proportion do you intend to take your, low cost deposits, CASA ratio to? I mean, year on year, it's increased from what, close to around 17% to now 20%. What's your target here?
The comfortable one would be around 23 to 25, at least for this financial year. So confident that it will be closer to 23 at least. But 25 would be a good ratio. But however, the focus would also be that the CASA remains a low-cost fund and do not really want that also to be priced anywhere closer to the FD rate.
Okay. In terms of your loan book, which is the category that you are probably the most bullish on when it going into FY25, MFI, commercial, housing loans, SBL, others?
Mortgages and commercial vehicles. Commercial vehicles obviously is going through a good cycle. So we'll have to build it very cautiously. So currently, overall, even at the industry level, the gross NPA and net NPA for commercial vehicle segment is much lower. So ours is much lower than that as we have started building the base in the recent past. So we'll be bullish, but however, cautious in terms of commercial vehicle. Mortgages, which is a business focused mortgages, will be our core growth area for this year, apart from inclusive plans.
And credit cost, would you have a number for that as well, a target?
Approximately around 2% is what we'll be comfortable with. Anything little around lesser than that.
All right. And since you're guiding for higher deposit growth, higher AUM growth, etc., at some point, would you look at also increasing your capital, maybe some sort of fundraise in the near future?
We are currently comfortable at 28.3 in terms of capital adequacy, higher than the regulated requirement of 15%. So we don't intend at this point of time for any capital raise. But however, we'll be opportunistic as and when there is any opportunity, we will. But currently, we are not considering it.
Okay. All right. So we're going to let you go on that note. Thanks very much for joining in and speaking with us. So that is Suryoday Small Finance Bank. The stock has run up quite significantly in the past 12 months. It's up around 70% and it's doing well today, up around 2%. The company is quite confident in terms of loan growth going forward. Deposit growth should be around 40% and they're expecting net interest margins to probably come in at around 10 to 10.5% in terms of guidance. So that's on that particular company. We need to take a short break, but as we do that, we have an announcement to share with you all. Our upcoming live personal finance webinar, CNBC TV18 Accelerate, will feature none other than the top market expert Nilesh Shah, MD of Kotak Mahindra AMC, who will answer all of your questions on managing your finances and also conducting a special masterclass on what not to do with your finances and the mistakes to avoid. CNBC TV18 Accelerate Personal Finance Handbook with Sonia Shenoy will also feature 3 well-known experts and we'll dive into everything you need to know to master your finances and learn how to grow your wealth. Don't miss this chance. Join us on the 11th of May, 9 a.m. We have limited seats, so scan the QR code on your screens to register.